Let me tell you why this is the kind of headline shorts quietly hate. It's not dramatic, it's not explosive, there's no big court ruling, there's no injunction, there's no settlement. It's just a deadline getting pushed out. But when almost half the float is betting against a stock, time is not neutral. Time becomes pressure, and right now, the clock just moved in a way that does not favor the crowded shorts. Today in the video, I'm going to explain what actually happened in the Novo Nordisk lawsuit and what it really means that the response deadline is now April 1st, and why a simple calendar extension can shift the risk profile in a stock with massive short interest. We're going to break down how lawsuits work, why shorts need catalysts to hit fast, and how delays can quietly create the setup for a squeeze even without any legal victory.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
And if you're new to the channel, my name is Mikhail. I'm a partner at X10 Day Trading. I've been working together with the team for 4 years because my highest value in life is freedom. And it's why I've been able to live remotely for the last 8 years. I've been working with businesses, 7-figure, 8-figure entrepreneurs over the last 8 years. One thing I saw time and time again is to experience true freedom in life, you need two things. You need time freedom and you need financial freedom. If you have time without the money, you're not free. If you have money without the time, you're not free. Which is why we built a done-for-you day trading service where you can have our pro traders trade for you. You can see our results here over the last few months. We expect anywhere from 5 to 15% returns every single month. And that's what we've been able to do for our clients. Some have portfolios up to 150K, $500,000 trading inside of our software. It's called AutoPilot. And we've developed over the last 4 years, investing over $1 million to give the everyday trader that edge to be able to be a professional day trader simply by switching on the software at the start of the day, let our traders do their work, and then you can see the results month after month. If you want to find out more, see the link below, jump on a call with me, I'll walk you through the entire process. But without further ado, let's get stuck into today's video. Let's look at this from a high level. Novo Nordisk filed a patent lawsuit against HIMS and HERS related to compounded semaglutide, the active ingredient used in products like Wegovy. This came after the FDA signaled that semaglutide was no longer in shortage, which means it had increased scrutiny around mass-marketed compounded GLP-1 products. That lawsuit became the centerpiece of the bear case. The narrative was very simple. Regulation tightens, patent enforcement ramps up, compounded access shrinks, revenue gets hit, and stocks fall. Because that narrative sounded clean and urgent and short interest built up heavily, tens of millions of shares have been sold short and a very large percentage of the float is positioned for downside. So here's what's changed now. HIMS and Novo jointly agreed to extend the deadline for HIMS to respond to the complaint. Now, HIMS has until April 1st to file its answer or motion. That's it. No ruling, no decision, just more time. So here's why that really matters for you, for an investor, and for the market. Now, a lot of people think lawsuits move fast. They don't. If you've ever been involved with one, they follow a very strict process, and sometimes that process can really be drawn out, any 5-10 times the length, and sometimes the price of what you think it can be. Now, a complaint is filed, the defendant gets time to respond. Often both sides agree to extend deadlines early in the case. So judges usually approve those extensions. Now, this does not mean someone is winning or losing. What it does mean is that the next legal checkpoint is further away. And if you are short, that changes your risk window massively. If we talk about that simply, when you short a stock, you borrow shares and sell them. So you're hoping to buy them back later at a lower price. If you short at $20 and you buy back at $10, you make $10 for every share you purchase. But if the stock rises to $30, you are down $10 per share. If it rises to $40, you are down $20 per share. And there is no cap on how high it can go. So shorts need two things. First, they need to be right. And they need to be right on a specific time window, because while they wait, they pay borrow costs, they tie up capital, and they take risks that the stock moves against them. If a major legal event was expected soon and that event gets pushed out, the short position becomes exposed for longer than planned. Now, that extra time really does matter. If we think about the environment HIMS is currently traded in, it is not a tiny company. It has reported hundreds of millions in quarterly revenue. It has millions of subscribers. It has positioned itself as a broad healthcare platform, not just a one-product story. The bear thesis says the legal and regulatory pressure around GLP-1 compounding could materially damage the business. But the bull thesis says that this is a diversified platform with strong demand and the ability to adapt. I'm on this side of this fence. The lawsuit is the battlefield between those views. So when the timeline shifts, it doesn't settle the debate, but it changes the pacing. Instead of a near-term legal hammer coming down, the market has now weeks of open air before the next formal response. And we don't even know if there's going to be a ruling on April 1st. During that time, the stock will trade on other forces: earnings expectations, partnership headlines, product expansion chatter, retail interest, momentum, positioning, all these things. The acquisition of Eucalyptus, which has just happened, the partnering with Klarna for the payment plans on GLP-1s. And the positioning is really key here, because when short interest is very high, every short position is future buying pressure. Every borrowed share must be returned. To return it, the short must buy shares in the market. If the price starts moving up while the legal overhang is delayed, some shorts will decide they don't want to sit through the volatility. They will trim, they will close. Those buy orders push the stock higher, and higher prices create more losses for remaining shorts. That can trigger more covering, and that is how squeezes begin. Not because the lawsuit disappeared. That still exists. That's still a reality they need to work through, but because the timing changed. So if we look at this objectively, the lawsuit is still active, the patent dispute is real. Regulatory risks remain real, and nothing has really been resolved in this matter. This deadline extension does not mean HIMS wins. It does not mean Novo loses. It does not change the underlying legal questions. But markets do not move on outcomes. They do sometimes, but most of the time they're going to move on probability and timing. If the worst case event is no longer immediate, the market may stop pricing in immediate collapse. And in a stock with heavy short positioning, that subtle shift can be enough. Here's the emotional side of it. Imagine you are short because you believed a sharp legal blow was coming soon. Now the date moves. You're still short. The stock starts to stabilize, and maybe it even drifts higher, which it has this week. Now you have to decide. Do you hold through another few weeks of uncertainty? Do you risk a squeeze? Do you reduce exposure? If enough funds ask those questions at the same time, the unwind can start quietly, and quiet unwinds often become very loud moves. And that is why this boring extension can be the short's #1 nightmare right now. Not because it solved the lawsuit, but because it stretched the timeline in a stock where time works against crowded positions. This was not a big dramatic court win. It was a clock adjustment, but in markets, these clocks really matter. And if the next major legal step is now weeks away and the company continues operating in the meantime, what happens if the stock starts climbing before April 1st? How many shorts are willing to sit through that risk window? And if even a fraction of them decide to close early, how much buying pressure does that then create? That is the tension building right now. And when tension builds in a crowded short, it rarely stays quiet for long. I am really interested to see how this is going to be playing out over the next few weeks and what the outcome, if we get an outcome on April 1st. If you want to find out what's going on every single day in the markets with HIMS, you can follow my other channel here, subscribe, like, drop a comment below. Let me know what videos you'd love to hear me speak on, specifically around HIMS. I'm dropping 10 videos a day for you guys, so follow along and I'll see you in tomorrow's video.